following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 22nd magnificent Monday edition of today's Trader's Edge show. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We get the opportunity to see what the markets are communicating to you and I just past 1 o'clock in the afternoon. So let's go ahead and get this show started on this magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we have the Dow trading up 211 points. She's trading out at 16,603. S&P up about 25 points, trading at 1942. NASDAQ Composite up 62 points at 45.66. Russell 2000 up 12.5 points. That's trading out at 10.22. Goldilocks back $20, trading at 12.10. Silver up 18 cents at 15.19. Light sweet crude up $2.40, trading at 32.05. We've got to take a look at all of those. Leading the charge here to the upside, the amazing Amazon, that's up $22, about 4%. Chipotle's up $13.5, 2.5%. Tesla up $10, that's up 6%, trading at 176.66. Google's up $9. Radius Healthcare is up 26%, that's up $7. To the downside, individual stock, Bailey and Pharmaceuticals, no surprise there, down 10% today, off $8. Viasat Inc. down 6% off $4. Perigo Company down about $4 as well. So where do we begin? Let's start by taking a look at the at some daily charts, some monthly charts, some 5-hour charts out here. Get a feel what's going on in the markets. First, let's start with the Dow. And we take a look at the Dow. Let me actually put a monthly chart up on my screen. Now, obviously, the month is not ending today. When does the month? When is the 29th? Just to see when that falls. So a week from today, right? This year is a leap year, so we've got 29 days in the month. In fact, that'll be Polar's birthday. I think if we do the division, maybe he's about 13. Is he 13 years old? 13, yeah, he might be about 13 or 14 years old. Pretty smart guy for only being 13 or 14 years old out there. If we take a look at the monthly chart here for the Dow to get a feel for where price is likely headed to, if we were to close the month right now, what we know about the monthly chart for the Dow, candle-wise, you'd have a nice hammer candle. Don't know if that we're going to see at the end of the month. Pretty good chance if the Dow finishes up near its session high, whatever that might be, by next Monday. We would likely see a hammer-style candle out here. Where price is probably headed to, it's probably headed back to the trend line. Now, that's a trend line. It's a green diagonal line on my screen. That's coming off of the lows of March of 2009, and then we're just simply using as our next touch point the lows of October in 2011. We know that price held that trend line, held it really well up until last month, the month of January. Price broke through there. Obviously, price continued to, we went back and in essence tested those lows. You've heard it a million times before, the lows of August, the lows of September 29th, really August in this case here. And and that's at about the 15,340-ish type area out here. Well, we also know about the Dow really trading in a consolidation range, right? It's a monthly chart. Here, in essence, is your consolidation box. Here's your, well, if I can grab the tool, I could show you your consolidation box. Wow. One more time. Let's see if the third time is actually the charm out here. Yep. There we go. There's the charm. So in essence, there's your consolidation. It really doesn't go out that far. Let me kind of squish it in here. That in essence is your consolidation pattern. So if the 15,340 level gets taken out, what you can do to come up with a measured move would just simply take that consolidation box, put it onto the bottom. We're not there just yet. What price is likely to do whenever you break a consolidation level, when you start to see price headed back towards, when you break a trend line, what price will typically do, especially as you see price moving towards that level, it just becomes a magnet. So we're not really there just yet, pretty close to it, but that's what the monthly chart is showing us. So if we look at the daily time frame chart here for the Dow, you can see that green line out there. Now remember, we're using this as not an exact number, but pretty close. You can see there's also another consolidation pattern that is formed out here. Let's go ahead and try to draw that box in. And that consolidation is basically this right there, where we had, in essence, that double bottom test of the January 20th low out here. So a shorter term consolidation, but nonetheless, right now today, we've got the Dow breaking through that consolidation. So that says to me, price is going to try to get back to that trend line that it broke. If it can get above that trend line, here's where the price projection is. That price projection takes you up into probably about 17,500 or so. But one thing at a time. If we just take a look at also the retracement, though, just for the heck of it, off of the highs from November in 2015 down to lows here on January 20th, the 0.786 retracement level, 17,437, but it's that 0.618 retracement area, 17,012. That could, in essence, be the target, the intersection of our horizontal level of price projections as well as that diagonal level of that trend line out there. So that's what the Dow is communicating to you and I. If I take a look at the advanced decline oscillator inside of the Dow, that's the one that's been above zero for the longest period of time. It's off to higher highs today. Reading here 3.17 versus a couple of days ago 3.10 as it moves to higher ground. So that looks pretty good as we take a look at the moves. Let's go see what the volume metrics is as we've moved past a swing point inside the diamonds out here, the DIA. That is trading out at 165.80, 1.7 million shares as we speak right now. It's taking out a swing point. There's really no A to B equals CD out here. I mean, I guess you could come up with this one, but let's just take a look at swing points right now. The trade, well, let's get volume out of here. If I don't put the volume metric on my system, how can we actually get a feel for what's going on? So the swing point here from February 1st, that had volume, I tell you, I'm going to give that to you. That had volume of 6.9 million shares. Well, light volume. I don't even have to do the mathematical straight line to figure this out. You're up and over the swing point from February 1st. You're doing it with light volume, 1.8 million shares so far today. We can double it. You'd be at 3.6 million shares. So the last time up here on February 1st into this area was 7 million shares. Now, you're above it with light volume. What does that mean? Just means you're above it with light volume. Can it be a consolidation breakout? Yeah, it absolutely can. Do you like to see conviction behind the move? Yeah, you certainly do. So where is it that price is headed if we take a look at the daily time frame chart out here? Let's get rid of this retracement area. I think we may have covered this, but let's do it again. We're coming back in this case here to the November 4th high all the way down to January 20th. This says 169.96. No, we actually did it on the Dow versus the Dow diamonds out here. So that's the message of the Dow. The last piece of information that we want, I guess we'll just have to wait till we get back from this breakout here. But let's just go look at the 5-hour chart for the Dow futures. We can see it's moving higher with less relative strength. Never a good thing. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to that break, we were really diving down into the Dow to get a feel for what's going on monthly. We took a look at monthly. We took a look at the daily. We went over to the Dow Diamonds to see what's going on today. Now, we took a look at the diamonds. We saw the price was moving higher with what? We saw those moving higher with light volume. When we take a look at the strength behind this move, the momentum strength behind this move, we can see that price also is moving higher with less relative weakness. Now, this gives us better signals and getting above a swing point, especially in the ETF structures, you know, with volume, with light volume, whatever it is. When we start to see this move here, it is right now just a weather forecaster's warning for a potential storm ahead. Not until the cavalry, in this case here, the cavalry being the bears, were to show up, does this pattern here mean a lot. But it is something to be paying attention to on this 5-hour chart out here. We can see that, you know, as price moves lower and does with less relative strength, less relative weakness out here, that often can be signs of longer term, shorter term reversal patterns. It's nothing more than a warning sign as we speak right now. Otherwise, the 5-hour chart looks pretty good. But if we take a look at the 5-hour charts here for the NQ and the ES, now maybe we'll just go in reverse order here, and we take a look at the, let's look at this one. This is the NQ right now. So we look at the NASDAQ and the 5-hour time frame. Whoops, didn't mean to do that. I meant to do this. The 5-hour time frame, we can see the price is moving higher, doing it with less relative strength out there, and we are in wave number 6 out here. Now, it's a 5-hour chart. This current candle session does not complete for another 40 minutes out here, not until 2 p.m. The earliest time frame any kind of reversal that could show up would be as the contract comes to a close for the afternoon at 5:15 out here. If we were then to get a bearish reversal signal, and I'm not saying we are, this is just something that you look, we have to always be looking at the charts. The responsibility of the charts is to communicate to you and I. It's our responsibility to interpret what it is that they are communicating to us. Hope that makes sense. Of course it does. In this case here, we know that price is moving lower or higher with less relative a strength out here. Look, when the bottom was formed, okay, when you couldn't find anybody to call a bottom, or I can't say you couldn't find anybody. You could find it with inside folks here at TFNN, or you'd have other people that maybe gave you wishy-washy or wishy-washy answers as to why. We just look at this pattern, beautiful pattern that is out here. So the bottom was making a pattern. This case here is prices moving lower, doing it less relative weakness. Why would a top not form with the same thing out here? Look, until the cavalry, the Bears cavalry arrives out here, it's just a warning shot, but we may be getting close to some kind of market top out here. So, like I suggest to any trader or investor, and that includes investors, is always use stops. The actual bull crap that they communicate to you, I'll just say, Jim Cramer, it's great, the show and everything that he's got out there, but every now and then I might hear somebody call in and, they ask about using stops, and he's like, no, you don't use stops. Like, he should be taken out behind the barn and shot for something like that. Of course you use stops. You can always come back in that very next day out there. But, if your stops get taken out, it means that there was something wrong with the trading decision that you had there. That's just absolute hogwash out there. In any event, the 5 hours. Let's go look at what the daily time frame charts are looking at. We looked at the that was the NQ. Let's go see what the NDX 100 is, and let's look at the Nasdaq Composite, because I got that symbol. It's up 61.45 as we speak right now. Now we can see here that the Nasdaq Composite is slightly weaker than the Dow. Right, the Dow had already gotten above the February 1st high, but in the case of the Nasdaq Composite, the low of that candle session from February 1st is 45.65. You're at 45.65 as we speak right now. We're only about 50 cents into that swing point. Any close inside of 45.65 says pretty good chance that you're going to go test the swing point high of 46.36. But I'll defer to whatever patterns are going on inside of the 5-hour chart, 2-hour chart, or something like that, versus just simply the cash index out here. If we go over, well, I know we're not hitting the exact replica indices out here, but if we do take a look at the Qs, would have been better if we looked at the NDX 100. But if we take a look at the Qs, volume-wise, we've got volume today of 12.5 million shares, and that is going into the swing from February the 1st that has 32 million shares. Okay, you don't have to be a rocket scientist to figure this out. We've been trading for 4 hours. There's only 6.5 hours in the trading session. And even if we multiply it times 2, you still don't get there. Doesn't mean that it doesn't go up and test the high, 104.80. The low of that swing is 103.23. You're at 103.10 as we speak right now. Now, you could be getting what we would call a classic rejection of a swing point on price and volume if you were to see it close below 103.23. But again, I caution you to make your trading decisions just off of what the ETFs are doing, the indice ETFs. You'll get burned more times than not out here. We'll defer to those patterns that are really great at calling tops and bottoms, like we just looked at when we looked at the 5-hour chart here for the NQ. We'll use that as an overriding factor. But the Qs do make highs with light volume, and they do make lows with strong volume out there. So it does say that there's not any conviction. Nice price move, no question about that. But there is no conviction behind this. Again, we'll defer to the chart that gives us the best information out here. If we take a look at let's just go back and take a look at the NASDAQ Composite on a monthly chart as well. Let me see what we have out here. Let's put our monthly time frame and see what we've got. Let me turn off the volume bar. Just give me my little tool out here just to widen that chart out. No hammer candle yet, but if you were to finish up towards its session highs, you certainly would get that. What we know about the NASDAQ Composite at this stage of the game is it too is in essence trading inside a consolidating pattern out here. So that consolidating pattern, this consolidation can go on for quite a while, but we'll say the consolidation started back here in October 2014, and it roughly goes from the price point of about 4,100 up to about 5,100. We'll just use 1,000 points out there, and any move above the swing from July 1st out there, that would be one heck of a it'd be a consolidation breakout to the upside. Here's what we know about the NASDAQ Composite. The trend line is still intact. It has not been broken. So the trend is still your friend inside of the NASDAQ composite out there. So that's what's going on inside of the composite, the NQs and so forth that we need to pay attention to. So we're searching here to find out what the markets are communicating. ES Mini as well. If we take a look at it, what we see here is this is now only in wave number 5 to the upside. But forget about which wave it's in. We see that price again moving higher, doing it with less relative strength out there. Never a good thing. You would have thought that today, with the futures market being up a couple hundred points coming into the open of the session, if ever there was a message that it was time for the bulls to make their run, not that there's anything wrong with a 200-point move inside the Dow, but there is just simply no oomph behind it. As far as I know, today is not a holiday out there. So this says you got to be careful. This is the market getting ready to, I don't know if you can do that trick, where you put all your glasses and your china on a table and you just whip that tablecloth out. You do that little rug pull. That, in essence, is, we have to be careful of right here. Form the bottom in the ES. No reason it can't form the top. We get back. Let's go take a look at gold and silver and light sweet crude. We got to go take a look at light sweet crude. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Welcome back, folks. Dow's up 235. S&P is up 24. I mentioned let's go take a look at oil. So let's go take a look at oil out here. Now, I'm going to put we just were taking a look at some number of different charts, right? We looked at some intraday charts that showed when the market bottomed last time. My clients and I, we took that first trade off of the bottom. And we took that first trade, and I think, well, this clients could have chosen one of three different ETFs. The one-time ETF. We chose the Qs, by the way. We were along the NDX 100, or the QLD, the 2X, or the 3X, the TQQQ. All three of them returned basically the same reward to risk out there, because really that's what it's all about. A good trade, no question. We went ahead and we had closed that out pretty much at the top. And then we had the patterns out there that knew that we didn't know, but was suggesting to us the market was going to pull back. You were familiar with those. We took a look at it. It was on the 120-minute time frame charts out there. And then on Friday, when I was doing the show with you guys, I ran into the internet issues, right? Was doing most of the show, well, the first half hour over the phone, with some dead charts out there. Well, that was no fun. But as I was really trying to walk you through everything, I was actually communicating to you that the market had put in a bottom. We took a look at the A to B equals CD patterns on the 30-minute time frame out there. So we went ahead and we went long again on Friday. So we're long the market right now. But it doesn't matter which side you are in. Whichever side you're in, you should be looking at the other side of the trade to understand, what's the other team thinking at this stage. Everybody has been trying to search for a bottom inside of light sweet crude. I'm going to put the 5-hour, not the 5-hour, the monthly chart on my screen out here. And this is the continuous contract, by the way. So I've got plenty of data that we can select from. So, if we just so I grab the correct, we can see that the light sweet crude, the monthly contract out here, continuous contract. This is back in May of, give me a moment here. This is May of what? May of what year? May of 2011. When it made its high, it did it in that wonderful baseball fashion where it had that 7th inning stretch, count number 7, to the upside. And now, if we go from that 7th inning stretch to where we're at right now, voila, what do you get? Right now, we're in wave number 7. Now, when in May of 2011, when that top was made, nice little bearish reversal signal. The market communicates to us. That's its role. And bulls and bears, they show up for work each and every day. And when they punch in, they are punching in as candle experts, artists out there. They got to draw these candles out here. You and I, we've got to figure out if they mean anything. Hey, if you wanted to be a bull in light sweet crude, you'd love to see the session end right here, right now. Because if it did, from a monthly perspective, you would have a 7th wave move to the downside. 7th wave, by the way, called the top. You'd have price moving lower on a monthly basis with less relative weakness out here. And you've got a nice little hammer candle that has formed thus far. Now, unfortunately, we've got to come back to this a week from today. But if this was how it was going to end, the trade is pretty easy. Patterns can fail. But this is telling us that light sweet crude has found its bottom, not until you were to see that low of this month taken out. So that's what the monthly chart is communicating to you. Pretty cool, huh? Same patterns that we look at, whether it's intraday, whether it's monthly, what have you. Patterns work the same way out here. Now let's go take a look at what's going on from a daily perspective. So as we put the daily chart, that's the monthly chart. Let me go ahead and put the daily chart. Now the cool thing is I actually didn't know that. I was just we're just doing this live, and so during the break I put up that chart just to see. On this chart here, I don't clearly see as well as the tool that I built inside my Ninja Trader platform out here. But when I punched this up, I saw the hammer candle. I said, let me go see what else is going on out here. Now, in the daily time frame, I believe we're right up against resistance. Well, resistance of its TAS point of control. It's daily point of control out here. Now, this point of control, let's go take a look at it. These are the blue lines that you're looking at on my chart. Whoops. I'm just trying to make this a little bit larger for us to take a look at. We don't have to really worry about the historical data, right? We've already looked at that from a monthly perspective. Okay, there. Now we got it nice and big. Now, so what do we know out here? we know a couple different things. First, the bottom of my chart is our price oscillator. What's a price oscillator? It's the difference between two moving averages. Look, that's what a MACD is, right? The MACD uses 12 and 26 out there. What was it, Gerald Pell? And not that there's anything wrong with those two moving averages, but when we look at our price oscillator, we like to look at the difference between, I like to look at the difference between the 19 and the 39. Now, that was developed by Sherman and Miriam McClellan out there. They both were created. Basically, they're on two sides of a different country, and they, in essence, came up with the same thing. They just called it a little something different out here. Now, this is really kind of cool as well. You know, you and I, we just took a look at price relative strength divergence, right? We took a look at that. And you can do a similar type of diverging pattern. Look at here in light sweet crude. This is a daily basis, by the way. We saw what? Price move lower. And when we take a look at the price oscillator, look, when the price oscillator is rising, that's a beautiful thing. That tells you that it is the buyers that are the ones that have the ball out here. The zero line is really important. On a daily chart, we're nowhere near the zero line, by the way. Rising and above zero, really bullish. Rising from below zero, bullish. But be careful, could just be counter trend rally out here. But take a look at that divergence that we have just inside the price oscillator out here. Now, that takes us back to where we're. So that's actually, so the whole point of that is it's another sign of a potential bottom out here. So it's really the daily chart happens to be confirming what you and I just looked at on a monthly basis. Now, what we know is this: price has run right into resistance 2 days ago. Price ran into this resistance level. It's point of control. Now, right here at this point of control, 32.04. By the way, the intra-session high today has been 32.05. God, you got to love that. I mean, to the tick out here. And at 32.04, 32.05, you've got the sellers that are just getting ready to try to thump. You know, that is a point where the sellers have actually overwhelmed the buyers out here. They're both comfortable, but you got to say, you know, when you just look at this chart out here, it's sellers that have really been in control of that area all the way down to that 29 level. Certainly below that, but certainly we'll call it 29, 26. Now, here's the key. If this market's going to continue to move higher tomorrow, going to move higher on Wednesday, going to move higher on Thursday, you're going to have to see light sweet crude. And I hate to admit it, but look, we got to look at the charts for what it is that they're offering to us. We can't ignore a gift horse. Gift horse. What are they? I don't even remember who came up with the gift horse in the mouth expression out there. And what does it even mean? It might mean, you know, don't turn away a gift. Is that it? I don't know. Well, here's the gift that the market's giving to you and I. If we can see light sweet crude get about 32.04, it should then try for 34.82, the top of its box out there, or barks. Now, why do we want to take a look at that? Look, here's just the 30-minute chart of the ES Mini. That's up at the top of the screen. The bottom of the screen happens to be the 30-minute chart for light sweet crude. We can see the directional correlation is out there. If this market is going to bust them to the upside, truly bust them to the upside, what light sweet crude needs to do right now is it's got to get above 32.04. Hey, does it have to do it at 1:39 p.m.? No, but it needs to do it really soon out here. If we see this area act as resistance, you can expect at least a retracement inside the market. Likewise, if we get light sweet crude above this level, you can expect these markets to, like the car commercial, which one is it? Zoom, zoom, zoom. See Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 265. S&P is up 29. We've got the information out here supplied to us by one of our dinners, Jake, inside the Tiger's Den, about looking a gift horse in the mouth. So he says you look at a horse's mouth to determine its age and or its health out there. So I suppose that there's a certain number of teeth or the shape of the teeth or something along those lines in order to be able to determine the health and the age of the horse out there. And if you are given a horse as a gift, well, what you're not supposed to do is look that gift horse in the mouth. That would be like looking for a price tag if you were to receive a gift out there. So that is the background behind looking a gift horse in the mouth. Now, I think we just looked at a gift light sweet crude in the mouth out here, and we'll come back next week. We'll come back on Monday, certainly Tuesday, to take a look at the monthly chart for light sweet crude. But we know that it is nearing a bottoming. It's got a bottoming pattern, the same type of topping pattern that it had back in May, or only had one. Now we're talking about 1, 2, 3 type of patterns out there on the monthly basis. So we'll take a look at that. Now, what else? Oh, gold bugs out here, 1209.30. The number to be paying attention to, I could say, wrote it down out here, I'll give it to you, is 1213. You're 1210 right now. If gold closes at 1213, even just at 1213, it's really 1213. 30 or 40, I think, out there. But we'll just call it 1213. If you see a close below 1213, you're 1210 right now. There's a really good chance you're going to see gold continue to move lower, and could move lower in a bigger way out here. So if it doesn't close below 1213, then this is just really, like Tom likes to say, building cause out here to do something else, building cause up at the highs. Usually that means building cause to go ahead and consolidate and continue its move higher out there. But I have it on really good word. Everybody looking for that move to the upside is going to get the stuffing kicked out of them. But I've been saying that for several days, and that theory is not borne out here just yet. But it's not that theory has failed. But 1213 is the magic number inside of a Goldilocks to be paying attention to. If we look at currency pair, how about that Great British Pound? Big move here to the downside. So far, trade out at a $1.40, $1.41. Reminds me of back in the 1990s time frame when I used to travel over to Europe, and I used to play just to keep myself out of trouble, so to speak. I used to play Texas Hold'em. Do you like Texas Hold'em? I used to love playing that game. I haven't played it in a number of years out here, but I used to play over in London, over in the UK out there in the 90s, and it's really weird. When you go play Texas Hold'em here in the States, you're used to sitting down at the table, grabbing your chips, sitting down at the table. You've got a dealer supplied by the casino. First, the casinos over in Europe. This is how they used to be. I don't know what it is today, but this is certainly how it used to be. They were all private clubs. You had to join the casino. Now, joining the club out there, wasn't really too bad. It was like a 24-hour waiting period, but you went through, signing forms and this and that, and then you got a membership to the club, and then you could go out and play. And so that was I thought, hey, that was kind of cool. And but then my first time sitting down at the table, now you had to do the currency conversion, right? Because $1 to them, in this case here, £1. Well, that was $1.50 out here. So just trying to get your head straight on what you were actually betting out there. So that was one element. But then you had the other element where you sit down at the table, and you're sitting down with like about seven other guys. Of course, they knew that I was walking in there. They thought that I was a big fish that was walking in there. And but you have to deal. The cards get passed around from player to player to player. Now, dealing cards doesn't seem like it's that big of a deal out there. But when it's your first time, this is the daily chart. If we just pull the monthly chart out here of the Great British Pound, you start to sweat. Let me tell you what, you start focusing on dealing as opposed to your cards out there. But back in the early 90s, let me see here, where we were in the early 90s, where are we at? Yeah, you can see the pound actually a little bit lower today than it was back then. So back in the early 90s, we're in about the $1.40, $1.50-ish range, even got up to $1.70 back here towards the 1998 time frame out here. But right now, where is the Great British Pound likely headed to? Again, a monthly chart that you and I are looking at, we're trading into the swing point from 2009. So therefore, you say pretty good chance that this is headed to about $1.35. Hey, might not be a bad time to take a trip over to the UK and hang out at Hyde Park and some of the great restaurants, and maybe even go ahead and play some Texas Hold'em. And but check to see if you do that, see if you still have to join the casino to get in the door. Turns out I think I walked away pretty much breaking even out there. They start playing in the games over there in locals. You don't know if you're walking into guys that are playing as teams. So you always got to be careful. Always got to be careful wherever it is that you are gaming out here. So anyways, that was looking at the monthly chart, and sorry for the story, but it is what it is. If we look at the what do we want to look at next? We looked at gold. We looked at light sweet crude. Maybe we should go take a look at a couple. Oh, someone says natural gas. Okay, so Mike K wants to take a look at natural gas. Let's go see what it is doing out here. Current contract, is that correct? Current contract is April out here for natural gas. This thing is looking basically horrible. When is this going to find a bottom? Let me do this for you, Mike. Let me just switch over to a different set of charts, and I want to see where we are at and many kind of wave counts or anything else that might be going on as I take a look at natural gas. Trading out at about $1.80, $1.87 out here. Yeah, so about are you, maybe, Mike, if you're listening, are you long? Are you short? Are you looking to buy it? Tell me what it is that you are doing out here. If we take a look at, and I get different messages when I take a look at the current contract, which is really going to be more relevant, thinking of buying. So if we try to find some kind of pattern out here, the first pattern that shows up is what looks like maybe a butterfly buy pattern that perhaps is setting up. Now, a butterfly is going to have an A to B equals CD in it. So here's basically, I'm going to use this. Well, let's use the first A to B equals CD in this. So you can see you're below the 1 to 1.272 level, with maybe a $1.75 being your next level of A to B equals CD patterns out here. Let's take a look at the expansion of swing points. Now, the swing points looking at is the December 16th low. Whoops, that was the retracement. Let's go take a look at expansions, and that's going to be the low here from December 16th all the way to the high on January 8th. Now, what we can see is that, Mike, is that price is below, just traded below, just slightly below the 1.272 expansion. So what this sets up, let's go ahead and get a line in here. Ensign Windows is the one that really draws this pattern out here beautifully. Here I'm just simply drawing it by hand, so here is in essence your butterfly that is out here. Now what you want to do, Mike, if you're looking at a long position, is you really need to wait to see some type of bullish reversal candle, which we do not have today. Without that, this says that price can easily just make a 1.618 butterfly. And that would take you into the $171 to $175 area. So you may be nearing at least a tradable buy out here, but it's not here just yet. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome Welcome back, folks. Let's go back to natural gas. So I said now what I didn't do is I didn't qualify the question with regard to Mike was looking at taking a long position inside natural gas, and I didn't really qualify what's the time frame that he looks at for trading. Is this a long-term, short-term type of trade? Let's say that he was a short-term trader, though. Okay, because I said because my assumption when I said wait for the bulls to arrive because price could go lower, that was based upon looking for some signal off of a daily chart. Maybe that's not the type of trade that he was actually looking at. So, or maybe you as a listener, that's not the type of trade that you were looking at. So here's what we're going to go ahead and take a look at on a 30-minute basis out here. So here's what we're going to do. We're going to look at a 30-minute chart. Now, if you watch this on TigerTV, top portion of my chart, obviously the price levels, and you can see I've got the 30-minute TAS market profiles. We talked earlier about the price oscillator out here. That happens to be the center portion of my screen. We can see that is rising out here. So on a 30-minute chart, that is bullish. It became bullish really about 11 o'clock last night when we started to see that price oscillator rise. Now, we are not above zero just yet. So this still could just be a counter trend rally, but it's very close to the zero line. If it does get above zero, then that bodes really well, short-term wise, 30-minute type trader wise, for the bulls out here. Now, I'm going to do this. Here's the first thing I'm going to do is I'm going to actually turn off. And you can see we had some nice volume that came in. I don't know why. What was behind the move here at 8:30 and at 9 again, and then we saw some nice volume at 10 o'clock. So I don't know what was behind that move. Don't know what type of piece of news information. Maybe it was none. Maybe it's just simply moving in conjunction price-wise with light sweet crude. That chart that we looked at, if you trade this, you might go ahead and put the two side by side out here to see if there's a correlation. And if so, then you'll want to pay attention to that. And I presume that may be what it is. But here's what I'm going to first do. I'm going to turn off the volume. We don't need that anymore. We don't need the price oscillator any longer. We already know it's given us its message. And we also don't need the price bars. Now, here's what I want you to look at if you're watching this on Tiger TV. I'm going to talk about don't whatever the gift horse is in the mouth, don't look at gift horse in the mouth. You don't want to look at my teeth out here. Just don't look. This is a gift that I'm going to go ahead and give to you. So we've got our TAS market profiles, right? So great levels of horizontal support and resistance out here. But here's what I want you to notice. Each box, and they're the top of the box are going to be the same, area that is covered from left to right out here. New box forms from left to right. You see new lines show up. That's a new box. In this case here, you had both the top and the bottom and the point of control really at the same levels out here. But we've got no price. But this communicates a ton to us with regard to who's in control. You see, in this case here, when you start to see new bottoms form below the prior bottoms out here, this is telling us that the supply, the new area of supply out here, the demand area, right? This is telling us that it is the bears that absolutely have control. So on a 30-minute basis, look at how this has changed out here, right? Now, when we take a look at this last box that we're in, you see that point of control? It's really right in the middle. You want to see it either closer to the top or closer to the bottom of that box to really give you pricing information as to who's in control. And in the segment that we're in right now, I don't know who's in control, nor do you. We just know that price is trading within the range of $1.85 to $1.88. So if you were inclined to take a bullish trade and you were actually trading the contract, not UNG, right? We're looking at a 30-minute chart. You've got to make, you've got to be able to get in and out of the trade. So this is only for folks that want to trade the actual contract. I can make the case that buying it right about here, or $1.85, a couple of pennies lower out here, you could take that trade. You've got the bulls that seem to be in control, and you could ride this up to at least $1.88 out there. That's a short-term trade. But don't look at gift horse in the mouth. I just gave you a huge TAS market profile gift wrapped with a nice bow and everything. Steve Rhodes with TFNN. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.